Right, ladies and gentlemen, welcome back. Today we are going to be breaking down the live session as well as the risk management for the intrabar continuity strategy. Now, it's important to realize that before we actually move into the live session, we need to break down risk management because in trading, risk management overall and as a whole is probably the most important thing because every strategy in trading works, and that's a guarantee, right? Every single strategy works, and that's a guarantee. However, the reason that most traders aren't profitable at all is because they lack risk management, and that likely stems to obviously emotional decisions, right? Their emotions, or also their psychology as well. Right, I'm just going to put psych over there, which we'll get into on the next lesson and the next video. But overall, before we move into the live session, we need to break down the risk management for this strategy and how it's going to work so that we can obviously go and attack this live session with full clarity on in exactly knowing what we need to do. So let's get right into it. What we're going to be doing is using a $10,000 account over here, right? A demo account so that we can obviously demonstrate this for you all. So because we're using a $10,000 account over here, what you'll be using is 1% of that per trade. Now, it's important to remember and realize that the amount that you use to start your session, right, that is the amount that you are pretty much going to be multiplying by 1% and keeping as a constant trade size throughout the session, right? So that would mean that we are going to be taking a $100 trade. If by the end of the session you made $2,000 and now you go from $10,000 to, for example, like $12,000 on a session, then on your next session, 1% of that is going to be $120, right, for your trade size, and you keep that $120 throughout your entire session. So now let's create parameters so that we aren't just blindly trading or aren't just trading for the sake of trading and trading for as long as we feel like trading, because at the end of the day, right, trading is not about how you feel. So keep this in mind. Trading is not about how you feel. Trading is about following data and following statistics, right? So data, mathematics, statistics all fall into the factor of becoming profitable. Now, this is the metrics we're going to be using. A $10,000 account, 1% will equal to $100 per trade, right, for this entire session. Now, that obviously equals to 1 unit, and that's going to be very important because we obviously know we need parameters, and the parameters are going to be the TP, which is your take profit, right? This is where you stop. This is the point where you will stop after you have met a satisfiable amount of profit. Now, the SL is going to be your stop loss. So, if you experience a certain amount of loss that you aren't willing to further bear, then you end your session, right? So you trade between these parameters, and until either gets hit, you end your session. Now, for the take profit, a good thing to suggest is always plus 12 units, and then your stop loss will be minus 6 units. Now, listen here. Sorry, minus 5 units. Apologies, minus 5 units. Now, listen to this. If you have a 60% win rate, right, which is what you'll likely have with this strategy, anywhere from 60 and above, which is considered incredible. Because with pocket option, if you have that 92% payout, you are required to be above 52.08% win rates, right? That's a given. Now, if you have above a 60% win rate and greater, that means that you are going to be hitting this plus 12 60% of the time, right? So if we went to go and hit this plus 12 60% of the time, let's say we did 100 sessions, right? That would mean that we would win 60 sessions, right? So 60 sessions would end up in a win, and then 40 sessions would end up in obviously a loss like this. This is given at a 60% win rate. Now look at this. If we're winning 60 sessions out of 100, you would take the plus 12 over here and times it by 60, and then obviously times it by the 92%. This would give you your profit, right? So this would be the profit that you would make with this win rate. Now, the loss that you have would obviously be the minus 5 units over there, right? So the minus 5 units that we would make here. if you might multiply that by the 40 losses that you would have over 100 sessions times by losing the 400%, if you check the difference between these two, you will see that you will always end up in profit, right? So if we go 12 times 60 times 92%, right? You will find that you'll be at 662. So right, 662. Let's just round it down, okay? 662.4. We'll keep it like that, right? That's how much you gain. Now look at how much you will obviously lose. Minus 5 times 40 times 100% equals to minus 200, right? So for the loss, you're having minus 200. For the profit, you're having plus 662.4. That means that overall, you will make 462.4 in total on your session. And this is something you need to realize that is very important. Don't be emotional if your stop loss gets hit, because I used the example of 100 sessions, because 100 sessions is a lot, right? We'll obviously get into more of this in the next lesson, or the next module, but it's important to realize in this free course that your entire success in trading is not dictated by one session, right? It's dictated by hundreds of sessions because of data. Remember, I said that data is what matters, not how you feel after one session. Remember that. Keep that in mind. Now that we know exactly what our plus 12 take profit is and our minus 5 stop loss is, we know that at a 60% win rate, we can gain 462.4 units, which would be pretty much that times the $100 if we were to take that constant trade. Obviously, we know we can't just times it by the 100, because every single session, if we're making money or we're losing money and over the long run we're growing, the number, like for example, this $100 over here, based on 1% of our account size, is actually just going to keep growing and getting bigger and bigger because we're making more money. So this 462 units could have like 10 units timesing by 100, and then it keeps growing, right? So let's say you make 1,200 on your next session because you made plus 12 units over here. Then that would add on, and that would become 11,200 from here. Then your next session, let's say you go and win on the $11,200 accounts, which would then be $112 trades, and then you win another 12 units, and then you would times that by the plus 12 over here. Now, obviously, the units that you would likely expect to gain, right? This is just expected gain. The units you would expect to gain at a 60% win rate across 100 trades will be multiplied by either the plus 12 or the minus 5, right? After pretty much hundreds and hundreds of sessions, and pretty much like 10, 20, 30, 40 sessions at different values of the trades, right? But the point is that over the long run, this 1 unit trade size will continue to increase as your balance increases. Now, before we get into the live session, we need to understand one very important one last important thing, which is stop losses and take profits, but specifically trailing stop loss, so TSL, trailing stop loss, and trailing, just literally actually just the trailing stop loss. What am I saying? It's literally just the trailing stop loss, the TSL. How does that work? Well, we know in a session that if our take profit is plus 12 and our stop loss is minus 5, we start at 0 units, right? If we're starting at 0 units over here, what happens is we are trying to climb up and get to plus 12. The moment we get to plus 12 over here, we get out of the session, right? If we hit the minus 5 stop loss over here, we also get out of the session. Now, how does it work when you start climbing units? Well, let's say we go from 0 up to plus 1 units. If we get up to plus 1 units, you immediately start bringing this stop loss up to minus 4. Every single time you create a new high, right? And what I mean by new high is, let's say it goes like plus 1, plus 2, plus 3, plus 4. When you move from this to plus 2, then you move your stop loss, which was then at like minus 5, all the way down, or all the way, sorry, this would have been at minus 4, right? The stop loss would have been at minus 4 at plus 1. If it moves to plus 2, you would move this to minus 3, right? And then you'd keep moving it so long as you're creating brand new highs on your current profit, right? That's all that I'm pretty much meaning here. So let's say now you get to like plus 10 in take profit. That means, plus 10 in your current gain. What that would mean is your current trailing stop loss would just equal to the plus 10 minus 5. That's all that it is. So it's your most recent, right? Your trailing stop loss equals to your most recent maximum profit minus 5. That's all that it is. Okay, so I'm going to put the formula here so that you can see. It's very simple. Let's just zoom in here, make this a bit bigger. So your trading stop loss literally equals to your most recent, let's make this bigger, your most recent max profit reached, right? So what I mean by that is if you get to like plus 10, that would mean that you would minus 5 off of this and your trading stop loss would equal to plus 5, right? But if you go down from plus 10 down to like plus 9 or plus 8, you keep your trailing stop loss at plus 5. Okay, that's the fundamental of it. But your trailing stop loss literally will just equal to your most recent max profit reached minus 5. That's all that it is, okay? And as I explained, if your most recent max profit reached was plus 10, but then you go down to like minus 9 or like minus 8, you don't move this down to like from here to like plus 4, or you don't minus that to take it to plus 3. You take the most recent minus 5 and you keep that there, obviously, until you go and work this down and somehow end up getting down to plus 5. When you get down to that plus 5, you obviously then walk away, right? That's all that it is. That's all trading stop loss is to ensure that even if you are going on a run towards your take profits, right, like this, it ensures that, oh, I think something's just resetting it. Okay, there we go. It ensures that if you do experience losses after going on a run, you at least still walk away with somewhat of a profit. Obviously, here, if we got to plus 10 and we subtracted 5, worst case scenario, we're still walking away with 5 units of profits. That's all that it means, because we're just taking the most recent max profit minus 5. That's all that we're doing, is to ensure that we are still gaining and rather not losing, right? Because at the end of the day, worst case scenario, we're losing 5 units, right? Best case scenario, we're winning 12 units, and anything obviously greater than the minus 5 and between the plus 12. So anything greater than this or anything equal to that and a little bit less and greater than the minus 5 is always good, okay? The last thing you obviously want is to hit the minus 5 stop loss. But like I said, even all it takes is to just go up a brand new maximum unit reached or brand new maximum max profit reached. All you have to do is subtract it by 5 and you've got a brand new level as your trailing stop loss. We're going to see exactly how this is going to work very soon. And we can obviously use it with our quick trading calculator, which is broken down inside of the school community. All you have to do is just search quick trading school, or it's also linked in the YouTube description, in the description of this video, as well as my YouTube channel, where you can go take a look and see the stuff. I break it down every single day, these sort of strategies. Well, actually a main strategy, like what I'm teaching you now is mostly for as like a beginner, but what I teach inside of here is just on a different level. You can see the classrooms over here that we have for the students to learn. Also, we have calls with the students every single Saturday for the beginners, and on Sunday for the advanced members. It's incredible to see, and obviously you get access to this calculator when you are inside as well. Let's get back to it though, right? So we obviously know for our trailing stop loss, whatever max level we reach on our most recent max profit, we just subtract that by 5. And if we end up going below, for example, from a maximum profit of plus 10 reached minus 5, that would mean our trailing stop loss is plus 5. If we went down to plus 9, it doesn't mean that this changes to plus 4. We keep this, right? And we keep trading until we get this up to plus 11. Then this would get moved then to plus 6, right? Obviously, we would get out of the session once we get that to plus 12, like that, and we would get out of the session if this somehow worked its way down to the plus 5 and hit that, or worked its way down to the plus 6 and then hit that, using those different scenarios. Perfect. Now let's get straight into the session. So we're not going to need any of this anymore. I broke down a bit of the psychology, a bit of the trailing stop loss and the risk management overall, but now it's time to actually get into the live session. I'm going to be breaking down a lot of the intrabar continuity strategy for you and exactly how to execute it alongside this live session, and using a bit of the risk management on this quick trading calculator. Now, what you'll see with this calculator, which is obviously offered inside of the paid program, which you are more than welcome to join, how it works is you are given or using your initial capital of whatever it is over here. Obviously, we're going to be using $10,000 on this demo account to demonstrate. That would mean that it would automatically calculate our trade size to be $100, which we already have set up inside of our pocket option account. If you don't have it set up like this, go back to one of the first two videos and it will break down, I believe it's the basics of quick trading. It will break down how to set up your platform to look exactly like mine. You can see here, there's also wins, there's losses. You can calculate your expected value per trade. That's pretty much how much are you likely earning per trade, right, that you're placing. You can calculate your profit and loss here as well. Are you profitable or are you not, as well as your units of profit, and most importantly, your take profit that we're going to be aiming for over here, and the stop loss, which we're going to be staying away from, right? Obviously, the take profit being 12 units, right? 12 units times our trade size over here, and then stop loss being minus 5 units of our trade size over here. Perfect. Now we're going to get straight into the live trading session. Now, to refresh your memory on the intrabar continuity strategy, all that we're looking for is waiting for a brand new candle to open. Now, remember I did explain that we need to look at the trend that we're currently trading in before we start looking for the trades. Obviously, if you are a refined trader and you know a lot about pocket option, or you have been learning from the stuff inside of possibly the groups, or inside of the community, or even on YouTube, you can obviously add other confirmations. You could add indicators. You're more than welcome to do whatever you want to obviously go and customize that strategy for you. But what we're going to be doing is simply keeping it as simple as possible for you all and only trading with the trend. Remember, we said that if we are trading in a downtrend, right? If we're trading in a downtrend, we only want to be taking sells. If we're trading in an uptrend, we only want to be taking buys. And if the market is consolidating, we're not going to be taking trades at all, right? So we can already see here that this is most definitely a downtrend. We're creating a high here, down into a low there, back up into a high, down into a lower low, and then a lower high. Why is that? Because we're going from this high down into an even lower high, and we're going from this low down lower into a lower low. We see from this lower high we're going down into a lower low, right? Because this low over here is getting even lower, which means we can zoom into this chart. Now, because we know that this is a downtrend, we only want to be taking sells. Now, how exactly does this work again? Well, it's pretty simple. Like we said, at the start of a candle, it's going to open like this. Because we're trying to look for sells, what we are waiting for is a bottom wick to form, right? We want a bottom wick to form, or pretty much a low point to form on the candle. Then we want it to reverse. As soon as it reverses, we then take a 5-second trade to the downside. We're going to do this right now. We're waiting for that pullback. There we go. There's our pullback. Now we're going to take that trade to the downside and let it play out. See there? Beautiful stuff. What happened? The trade opened like this, quite flat. Then the candlestick started moving downwards. What happened? It then went from this, right, this sort of shape, and it retraced a little bit, leaving that wick, right? When it leaves that wick, we can take the trade down to the downside. If none of this is making sense in terms of the execution, it is because you did not watch the previous video properly and you need to rewatch it to understand it, okay? But there we obviously want to trade. So what are we going to do? We're going to move on to our trading calculator over here. We're going to click the win button and you'll see it has finally logged in our results over here for our trades. Now, perfect. That is the first trade we have taken. Now we can move on and find a different chart, right? We can see beautiful uptrend over here. This means we're only going to be taking buys. Okay, so that means we are waiting for a flat bar like this to open, the candle to open, to move upwards, right? We want the bar to move upwards like this, retrace a little bit, and then we're going to take trades to the upside, right? So how do we do that? Well, we wait for it to possibly even create a new high, right? Because we did say, there we go, there's a brand new high. Now we need a retracement. There we go, there's our retracement. What do? We take a buy to the upside, let the trade play out, and once again, another win, right? So we're going to add that win over there. Remember, we obviously explained how it works is when a bar gets created like this, right? So obviously a bar starts flat for an uptrend, the candlestick will move to the upside like that, and then that creates a new high. What we want is for that high to then reverse, right? And when it reverses slightly, then we take the buy, okay? We can't then take another buy if it stays below this most recent high over here that it retraced from. We need it to create a brand new high and then retrace down, and then we take the buy. Then it needs to create a new high, retraces down, and then we take the buy, right? Obviously opposite for a sell. You can see it's almost like a bit of a ladder that we're doing. We're just riding with the trend. So obviously we won there. Now we have added 2 wins. Now, it's important to note, guys, right, that this session can go in any direction. I could be documenting a YouTube strategy for you guys right now on YouTube, and this strategy could go and lose money right now. Okay, but that's the beauty of trading, is to show you how spontaneous it is. But we need to break down and execute it properly and as effectively as possible. What we're going to do is stall. Regardless of having this calculator over here, I want to graphically represent it over here on this mirror board so that you can see where we once were and where we are going to be now. So obviously we know that we are starting at 0 units. Our stop loss is at -5 units over here, and our take profit is at +12. Now, keep this in mind, right? Because we have gone and won 2 units. That means we've moved up to +2. What does that mean now? Well, in order to calculate our trailing stop loss, we need to take our most recent max profit reached and minus it by 5, right? So that means our most recent max profit reached is +2. What are we going to do? We're going to move this up to, you can either move this up to, or you can subtract this by 5. It will take you to the same point of -3. So that's exactly what we're going to do now, right? We are going to go and obviously have our current profit over here at +2, but we're going to move this up from -5 now to +3. Sorry, -3. What does that mean now? That means that worst case scenario on this day, we only lose 3 units, which would be $300 because it's -3 times 100. But at the end of the day, right, that is better than worst case scenario losing the 5 units. We've now saved ourselves an extra $200 on this session because we've won the first 2 units already. Let's let this session continue to play out and we'll see how it goes, right? So here we go, right? We obviously know that this is a strong uptrend still, right? We're still looking for buys. So we're still waiting for new highs to form and then a retracement, right? So we're waiting for that retracement. Still, there we go. There's our brand new high that was formed. We had the retracement and boom, right? Taking another trade to the upside and having once again another win. Why is that? We're in an uptrend. We're waiting for what? A new high to form, retrace downwards, and then we're going to take and place a trade to the upside. Now I know a lot of you are going to probably be thinking, Connor, well, if I lose a trade now, what do I do? Well, all that you're going to do is wait for it to make a push up, okay? You're going to wait for it to then create a brand new high, wait for it to pull down, and then place another trade to the upside, okay? You aren't going to be spamming trades. Do not spam trades or place multiple trades to try and recover. If you lose, you lose. Then you just wait for it to create a brand new high point, okay? Then you wait for it to reverse, then you take the trade, okay? So what you're going to see now, we will have a loss at some point, right? I hope. But we obviously won this, so we're going to add the win, right? That takes us up 3 units now. So what are we going to do? We're going to move this up now from +2 up to +3. Now we're going to minus this by 5, which would then move this up to -2 as our trailing stop loss, or we could have just moved it from -3 up 1. It doesn't matter, right? So now trailing stop loss is at -2, current profit is at +3, and we're moving along the trend and along this winning streak towards +12. We are going to have a loss, and in that way you will be able to see how we execute this a lot better. So now we know that the current high point is here. We're very far away from reaching this point, so this would be a waste of time, right? Trying to trade on this. So what we're going to do is change the pair and find a brand new one. Once again, this is way too high. We're not going to reach there, so we're going to keep looking, right? Here we go. This looks like a strong uptrend over here. But once again, another high point over here which has not been reached. We have to wait for that high point to break, okay? Because it hasn't even created a wick yet, so we can't even place that trade. Let's see this one. This looks like a downtrend, right? So what are we going to do? We're going to wait for it to break this low first. It needs to break this low first, and then when it breaks this low, we wait for it to pull back upwards, and then we take the trade downwards. That's how it works, right? But you can see that nothing's happening so far, so we're going to be patient on this trade, right? So brand new candle forms. Now we need it to retrace. Boom, there we go. We're in for a sell. So let's see how this trade plays out. There we go. Bang, another win, right? There we have it. There is another one which we're going to be adding to the session. Beautiful stuff. Now that we have won that trade, what we're going to do is obviously we add it here into the calculator, currently sitting at 100% win rate, incredible stuff. We're going to move this up from -2 up to -1, right? And we're obviously moving our profit up from +3 up to +4. Okay, we can obviously take that, minus it by 5. You'll see it always equals to -1. Now, what are you going to notice is that our trailing stop loss is now sitting at -1, right? And if it's sitting at -1, that is going to enable us to, over the long run, make more money right now. Because when we started the session, we were risking to only be having a -5. Well, we were pretty much risking the -5 stop loss originally, right? Remember, we had a -5 stop loss. We have gained 4 units, which means we have moved from -5 now up to -1 as our trailing stop loss, which means worst case scenario on a session like this, you only lose 1 unit, which would obviously then just be $100, right? But because we're 4 units up, we are up $368, which you can see over here. We're up $368 on this session, and it's going extremely well. I'm hoping that I have a loss at some points over here, so that you will be able to see how when you do have a trade, what you do is you wait for it to create a brand new high or a brand new low, wait for the retracement, and then another trade, right? So that's exactly what we're going to do. We see on this chart that this is obviously a downtrend. We see that these candles are not creating lows. So we're just going to go into a brand new trade over here. What is this? An uptrend, right? We can see down, up, down, up, down, up, and it's going up, right? An uptrend is simple. Look at the low point, look at the most recent high point, it's going up, right? So this is clearly an uptrend. Now, what are we looking for? Currently, we see that this is, because we're in an uptrend, we need to be looking at the high point. That is the high point over there. You can see that it's still currently below it. And if we tried to place a buy trade, what you would find, right, is that we probably, on the retracement down here and trying to take a buy, we probably would have lost. Now, if we did lose this trade, what we have to then wait for is for it to create a brand new high. The only way it can do that is to break above this point. Then we wait for a small retracement and a wick, right? A wick, and then we place the buy. But right now, that's not happening. So we have to be patient. And guys, patience is very important, right? You need to be patient. Now, can you see this, right? Can you see how it's creating that new high? You see, wait for that retracement, you would take the buy, and look how it goes up. You're probably wondering, like, Connor, why didn't you place that trade? Well, it is important to realize the payout of your trade. You see how this is 85%? You cannot place the trade if it is at an 85% payout, or in fact anything less than a 92% payout. You should not be placing the trade. Okay, it has to be 92%. So let's go and find one that says 92. There we go, 92. Now we can place the trade. We're still in the downtrend over here. So although these are showing a lot of momentum to the upside for buys, I'm not going to take it because overall, this is a downtrend, right? So we're not going to place that trade. Here we go. Here's overall downtrend once again, right? So here, we need to wait for this to break that low over there, right? And when it does break this low over here, we need it to retrace up, and then we can take the sell, right? But obviously, we aren't presented with any of those opportunities. Here we go. Brand new candle. There we go. Right, we're going to let this trade play out a little bit longer so that we can see, or this candle play out a little bit longer so that we can see. Also, another very important thing to notice is probably don't enter within like the first 5, actually, no, within the first 0 to 10 seconds of a candle. So when a candlestick opens and it starts its countdown from, it would be from 59 seconds or whatever, don't be placing the trades from that 59 to like 50 second counter, because what happens is sometimes the candles open and then they go up, they go down, they go up and they go down. And at that point, it's pretty much gambling, right? You don't want to be gambling as a trader as well. You want to ensure that you're consistent and making the right trades. You can see how it's creating these new lows, pushing up, and then it shoots downwards like that again, right? So very important. I want to quickly show this to you so that you can see before we continue trading. When the candlestick opens like this, right, so we wait for it to open, bang, right, we leave it. You can see there how it's counting down. We don't do anything until there is like a strong move being showed. You can see there in the first 10 seconds, we leave it. Now we can look for trades. Wait for that retracement. There we go. Now we will take the sell and see how this plays out, right? There you can see we actually had a losing trade, right? So couple things to note, right? Before we took that trade, you need to leave, maybe not even like the first 10 seconds, just leave it for like the first 3 seconds, I'd actually suggest, because you could actually still be getting a lot of trades from that 4 to 10 second period, right? Where it is obviously retracing and then you take the sell over here, right? So I would just say, don't enter immediately, right? In like the first 3 seconds that the candlestick does actually open, or else you're going to cause a lot of problems for yourself. All right, because obviously, like I said, when the candlestick opens, it normally like creates a lot of movement like this before it then decides, is it going to go up, or then decides, is it going to go down, right? So there we had a loss. Now, it's important for you to realize that because we had that loss, we're obviously going to note it in here, right, as a loss over there. And we're going to note it as a loss in here. Now, we're moving the current profit from +4 now to +3. So we once were at +4, we lost 1, now we're moving to +3. Now, that does not mean that we move this trailing stop loss down to -2. We keep it exactly the same because, remember, your trailing stop loss equals to your most recent max profit reach -5. And the most recent max profit reach was +4. Right? So we need to keep it at that, right? +4 -5 is -1. So we keep that and we continue trading. Now, because we had that losing trade, we would not be looking for brand new entries. We would have waited, right? We would have waited. We were trading on this one for sells. We would have waited for it to break below this previous low or this brand new low over here, then retrace, and then we look for new sells, right? So let's keep going. So we see here, we can take this sell to the downside here. Why is that? Well, if you saw, we're still in a downtrend, right? We're still in a downtrend. We broke this low, right? So for example, we broke the low like that, retraced, like we did over here, retraced, and then it moves downwards, and we took that sell. We've won the trade, right? Now, because we have won the trade, regardless of whether you win the trade or lose the trade, you have to wait for it to break a brand new low, right? So obviously we need to wait for this to break this low over here, get below it, right? What I mean by breaking this low is getting below this low, getting below it, retracing. So here we go, right? It's trying to get below this low. When it does, we wait for it to retrace, and then we take the sell. So there, broke the low, retrace, then we would take the sell, and look, bang, starts going down, right? And that would be our win over there. That would be a brand new trade to take. So if you do either have a win, right? If you either have a win or a loss, regardless of which one happens, you need to not take another trade. So do not take another trade. What you need to do is wait. Okay, you need to wait for either a brand new low to be created, right? And when that brand new low is created, you wait for it to pull back up. So you see here, brand new low created. We wait for that pull up. See, there's that pull up, and then it moves down, right? Whereas for waiting for a high to break, right? So for a high to break, let's say this was the uptrend, you would wait for this high over here to break above, retrace, and then take the buy. That's all that it is, right? Regardless of whether you have a win or a loss, you cannot take another trade, right? You do not take another trade. You only take one trade, okay, and then you wait for a brand new high or brand new low to form, whether you're trading in that uptrend or that downtrend, and then you take the trade. You don't take multiple trades one after another. Okay, so that's another rule that you need to note. Obviously, that rule, as well as do not trade in the first 3 seconds, right? Do not trade in the first 3 seconds of the open of a candle. Now, we've obviously gone and won that, so we're going to go back, add that back to our profits over here. So we add that win. Beautiful stuff. And then we also need to come back here and then just adjust this from +3 back to +4. Now, you are understanding this a lot easier. So what we're going to be doing, or what I'm going to be doing, is speeding this process up a lot more. So let's get right into it. We, according to the calculator, are up $360, and you can see that the $360 of profit is accurately represented from our initial capital of $10,000. Adding the 360 onto our calculator has now moved to 360. Right, so it is an accurate calculator, and it is something that you should definitely consider. Link in the bio, link in the video over here if you want to go take a look at the program. It is www.school/quick trading. Perfect. Let's get into taking more trades and seeing how the rest of this session plays out. We're currently sitting at an 83% win rate after 6 trades. We've won 5 trades, lost 1 trade, $360 in profits, 30% of the way there to our take profit, and you can see we're pretty much like using a healthy chart. So you can see the power behind the strategy if you execute it perfectly and if you take your time. And I want you to realize that another important lesson, okay? If you take your time, right? Take your time. Remember, I was speaking about patience. If you take your time and you are patient, what is going to happen? Well, you are going to be more of a perfect trader. Now, what I mean by a perfect trader is you're going to improve the quality of your trades. And if you improve the quality of your trades, you improve the win rates that you have, your win rate percentage. And if you improve your win rate percentage, you'll make more money regardless, right? That's how trading works. And that's something that I actually share to my students. So I hope you are starting to see a lot of value in this. And this is just like the free information. Imagine what I'm sharing inside of the paid program. Like I said, all you got to do is click the link below inside of the description, or just go to the bio of my YouTube channel and go take a look for yourself and really consider it, because it's incredible. Let's continue though, guys. We're having an absolutely splendid session so far. 83% win rates. Let's see if we can continue this. Like we obviously know, worst case scenario out of this session, we walk away with only having lost 1 unit. Right now, we're in a very favorable position, 4 units up, so we can continue to grow this towards the +12 take profit. And that's exactly what we're going to be doing. So let's continue. Right, we see that this is quite a choppy market right now. So obviously we were trying to look for buys over here to the upside because there was a clear direction to the upside. Now currently we're actually like quite choppy. You can see there's no clear direction. When there's no clear direction like this, you don't want to be trading. It needs to be clearly going up or clearly going down. Right, like this. This is clearly going up. You can see from there to there, it's going up. So we're going to be looking for buys. So let's get into it. Here we go. Because we're looking for buys, we needed to break this high point over here. So that's exactly what we're going to wait for. We've got 13 seconds left. We'll wait for that high to break. So let's see. Wait for it. Is it going to happen? Looks like it won't. No. There we go. But you see, boom. You see how that was almost like the end of the candle. That's another important thing. Is I would suggest when there's around 5 seconds left, right? Around 5 seconds left in the candle countdown, don't take the trade, right? So it's simple. Don't take the trade in the first 3 seconds. Okay, don't take the trade in the first 3 seconds. Don't take the trade, and don't take the trade in the last 5 seconds. Why is that? Because you obviously need to give yourself 5 seconds to place that trade. And now if you're taking trades when there's like 4 seconds left in the candle, then you're leaving yourself 1 second to trade in the next candle, and you don't even know what the next candle is going to be even, right? So at that point you're gambling. That's why I'm telling you, you're going to see here, right? You can place trades like this. This is fine. Like when it's over here. But when you try to place a trade here and it goes 5, 4, 3, 2, 1, and then it moves on to the next candle, your trade is still playing out for that 1 second. You see, if you're trying to take sells here, look how it went up. That's pocket option trying to like take money from you, dude. You just gotta not trade in the last 5 seconds. Like, I don't have to explain it anymore. You obviously understand it by now. Don't trade in the first 3 seconds and don't trade in the last 5 seconds. This will ensure that you stay away from the manipulation and the choppiness of the market, whether it's going up or down in the first 3 seconds or the last 5 seconds. And the last 5 seconds being that it keeps you away from trading the next candlestick that opens after that. Okay, another important thing. So, let's now actually take some trades because I'm dropping way too much value now. Okay, choppy market, right? Like I said, choppy market over here, choppy markets. Don't take the trade. We need a clear direction. Is it going up or is it going down? Okay, very simple. Let's look for some trades. Looks like this one's going down beautifully. So what we're going to do is just wait for a couple seconds here. There we go. There we go. Wait for that retracement. See that retracement there? Boom, we take the sell. And look what happens. We win. Right? Let me just move this. Perfect. Right, you saw that. Even though it was the smallest of wicks, it was almost like that. Right, but we still take the sell. Because it started like this, right? Then it retraces like this, and that's pretty much it moving up. And then we take the sell, and bang, we win. Right? Now you'll notice I won the trade. I don't take another trade. I wait for a brand new low to form. You see a brand new low forms, it retraces up. We take this out and look how it moves downwards again as a continuation. Very, very great stuff. That is going to be another win. So what we'll do here is move this up to +5, right? Move this up to +5 over here. And now our stop loss moves from -1 up to break even, which means that on a trading session like this, worst case scenario, you walk away having lost nothing. Right, we obviously need to add the win over here. So there we go. Now we're up 452 on the session, and you can see that 452 on the balance over there. Incredible stuff. 86, well, pretty much an 85.71% win rate is just insane. It's just insane. For 7 trades, winning 6 trades truly shows the power behind the strategy. Now, I'm giving this to you all for free. Imagine the stuff that I share inside of this program. It's insane, right? It is insane. Now, we're going to continue running this as far as we can to obviously go and hit this +12 take profit. So we're going to be explaining less and less and less now and just taking trades because you understand how this strategy works by now. So we're going to speed this up and keep going. So here we go. You see how it retraced there, right? It retraced downwards. It moved downwards, but there was pretty much like 4 seconds left. So we just didn't take the trade. We didn't force it. You see how it's at the start here in the first 3 seconds, it was bouncing up and down quite a lot. So we don't take the trade. Here, we want it to break that high, retrace down, boom. Now we're up. We take that buy. Let's see how it plays out. Boom. Another win, right? So we're going to add that win over there. Good stuff. We've added that win. So we're going to go and add this win over here. That's going to be putting us up 6 units now. Incredible. We're up 6 units. We are halfway to our take profit. Now, because we're up 6 units, what are we going to do? We're going to move the 0, right, up to +1. Because how do you calculate your trailing stop loss? You take your trailing stop loss, which will equal to your most recent max profit reach -5. So this is the most recent maximum profit reached. We subtract that by 5, which will give us +1. And that's exactly how we run with it. Perfect. Now we're pretty much up $554, and that would be it over there, 554. Now you can see the returns that you can get on this. We pretty much already have you already have made, like, on this account, a 5.44% return, right? Because you have pretty much made, off of that $10,000 account, 544. If you were to take this divided by that, it's a 5.44% return. The returns with quick trading, right, are incredible. The returns with quick trading are incredible. And remember, I said in the introduction, I said that all you have to do is master it, right? It takes very little time, right? It does not take a lot of time, and you can absolutely print money with it. Remember, I said that in the intro. You can see that now. You would be making a 5.44% return on your accounts that you started with on the session. You pretty much make around almost like a 10.8% return per session if you hit +12 take profits. It's insane. right? It's insane how much you can actually truly make from this when you do implement it and you do execute the one and only quick trading properly, right? You can make a lot of money from it. And that's why I'm giving you this opportunity. That's why I'm making this free course for you. It's for you to get value from it for free and open your eyes into this new way of making money online that you can literally go and use to print, right? There's no one else on the internet that is sharing information like this, that is teaching a way to make money like this, that is as simple as this, that you just have to follow. And the crazy thing is that it's for free and that you could literally go and like execute this, implement it into your own trading, right? Obviously, ensure that you do practice on demo first. Like I said, I'm not a financial advisor. You need to go and practice this on demo account first until you are comfortable. But not just comfortable with it, right? Not just based on your personal preference, but you need to probably go and test this across roughly around maybe even 10 to 20 sessions, right? You need to go and test this across 10 to 20 sessions and without cheating yourself. Across those 10 to 20 sessions, if you have an overall gain, right? So if your overall profit and loss is a positive or a gain, then sure, you can move on to a real account because you are doing it properly, but you can't cheat. Okay, you can't cheat yourself. You can't cheat anything that I'm teaching you. What I mean by overall profit and loss is this over here, using like the calculator or using your own calculation and using your own tracking of it. Even if you go and track it on here, like on a mirror board or something, it's called mirror, right? You can just go type here, mirror, like this, and then you can go get it, right? Mirror.com, and you'll be able to access it. But the point is, you can't just go jump straight into a real account. And this is something I teach my students. Some of the students that I have who are like part of the community have been in here for like the community for a month and they still not on a real account because it's important to realize that you need to obviously tick off the demo process first, right? There's a reason they give you the demo, right? There's a reason they give you the demo is to actually go and practice and get used to it, right? And then you don't just only go based off of how you feel. You go based off of data and what the data is telling you in a session, right? If it is telling you that you are profitable over 10 to 20 sessions, then sure, you can go into a real account, okay? Because then, if you weren't treating yourself and you were actually executing it properly, and you executed exactly the same on a real account, there is no reason you cannot be making money, right? Let's get back into the session. Another extra bit of source and information that I should not be sharing to you, but you still got it for free. Right, we're at +6, trailing stop loss at +1. That means on a session right now, on this session, worst case scenario, we walk away with still having gained $100, right? You would still gain 100 on this. And that's the power behind the trailing stop loss, right? The TSL. The TSL is powerful, guys. You need to execute it and implement it into your trading. Let's continue though. We're in an uptrend, right? Uptrend, we're trying to take buys. It needs to break this high and then retrace. Boom. Retraced. Now we can place this buy over here. Let's let it play out. Boom. Another win. So, here we go. Add another win. There we have it. 636 up. Let's check that's accurate there. 636. And then, because we have won that, we're going to move this now up to +7. Because we moved this up to +7, that would mean our TSL would be 5, well, pretty much +7 minus 5, so +2. Let's continue. Here's a brand new high, boom, retraces, we take the buy. Let's see if this continues to the upside on this. Looks like we lost that trade. Now, because I lost this trade, right, obviously I did not win this. I actually ended up losing it. You see how I'm not trying to force more trades to the upside. I'm not trying to place more buys in gambling and hoping that it's going to create more opportunities. I'm actually waiting for a retracement downwards and then you place another buy. The reason for that is because if it does not want a break above after like it retraces and it doesn't want to break above like that, the reason for that is because maybe it's going up like this and then it wants to reverse to the downside, right? So we're going to have our losing trades, but that's okay. And that's exactly why I don't re-enter immediately after. I wait for the break of a brand new high or the creation of a brand new high or low, and then you re-enter, right? So this will just take us down to +6, which is okay. We're still up money, and worst case scenario, we walk away with $200 in profit on the session, which is far better off than the -5 we started off with, right? We are pretty much saving ourselves $700, right? We're saving ourselves $700 because it's 7 units. We're saving ourselves 7 units by using the TSL. Very, very powerful. Very, very powerful. Okay, let's see. We need this high to get broken, right? We need that high to get broken above. Then it needs to retrace. And then we go up and take that buy. Obviously, that's not going to happen, right? We're in an uptrend. That's not happening. So we'll just wait for a brand new candle. So let's be patient and wait for it to come. Here we go. Remember, don't enter in the first 3 seconds. Let it play out first. There, wait for a retracement. Boom. Now we take the buy. Let's let the trade play out and see how it does. Boom. There we go. Now we have obviously gone and won the trade. Do we re-enter? No. We wait for a brand new high to get formed. We wait for it to retrace and then boom, we take another trade, right? So wait, let's see how it plays out. Bang. Another one, right? You see how we're not just immediately placing the trade one after another? We're waiting for it to break above the most recent high, right? So you see there, that was the high that was created there. We wait for it to go above it first. Then it must retrace. Then we go up with it, right? So let's see, does it go above it? There we go, it goes above it. Retraces, then we would go up again, right? Obviously on this one we might have lost, but still, there are 2 wins that we had there, right? So what do? We're going to move this from +6 up to +8, right? Now, because we're at +8, what are we going to do? Well, we actually need to add we had a loss here, my bad. We need to add the loss in there, I believe, right? Actually, am I being stupid right now? Let's have a look. So we're at 720 in profit. Let's just see, if I add 2 wins here, it should go to 720. Let me just make sure. Save and close. 620, okay, I think I did something wrong here. There we go. There's the 720. Right, so we are currently now 8 units in profit, right? We are 8 units in profit. We're up 720, right? $720 up. And we're up 720 over there. Now, right, because we're up 8 units, we need to move this up from +2, right? Because we were at a +6, I believe it was, but then it obviously started moving down, which is was our current stop loss, trailing stop loss over there. Because we're at +8 now, we've created a brand new maximum profit level reached. So now this is going to move from +2 now up to +3. Why is that? Well, let me remove this. That's because you take the most recent max profit reached -5, which was the +8 -5, which will now be +3. Incredible stuff. So now you can see 83% win rates, $720 in profit, 60% of the way there to our take profit. You can see how strong this equity curve is as well, right? This should not actually be called profits. This is more of an equity curve because this is actually your money that you're making. It's not just the profit, it's your equity that you're actually dealing with over here. Right, so your profit and loss, 728 and 83% win rates. We can see that 720 in profits. Incredible stuff. So now, guys, whoever's watching this and learning from this, we're up 8 units, right? We're 4 units away from hitting +12. And we have a current trailing stop loss 5 units below our +8 of +3. Which means that worst case on this session, we walk away with $300 made. Now, how crazy is that? Imagine the confidence that you would have as a trader knowing that worst case, you still made money on a day. That's the power of having a TSL, trading stop loss when you're trading. Something that I do share. One of the very, very, very basic beginner things I share to my members and my students inside of the program. let's wrap this session up because it is going extremely well. We don't even have to worry about the -5 stop loss that we started off with immediately, initially, because we've taken that from -5 now up to +3. We've gained 8 units on this session using this extremely powerful strategy, which if you learn correctly, you can make money because the proof is in front of your eyes. If you cannot make money from this, after you go and execute it, build up the confidence, build up the preference, build up being comfortable, but also not just relying on how you feel, but relying on data from around like 10 to 20 sessions of honest like collection of data, of honest recording of data. After those 10 to 20 sessions, if you have recorded it and it's profitable and you have been making money and you do the same thing on a real account, there's no reason you can't make money. Like I said, let's see how this trade plays out and the rest of this session as well. Cool. So we're only 4 wins away. Let's do this properly and ensure that we reach our take profits. If not, like I said, worst case scenario, we just walk away with the +3, which is okay, right? Like, that's money made. That's much better. Walking away with +3 is much better than walking away having lost -5 units, right? Trading stop losses are very crucial. Now, let's keep going. Looks like a strong downtrend over here. So we need to wait for this low down here to break. When it breaks, we wait for a retracement. Boom, retracement's made. We place the sell. Let the trade play out. Wait a couple seconds. We lose the trade. It's okay. That's how trading works, right? We record the losing trade over here. That's going to put us still up 620 in profits. We're going to move this now from +8 to +7. But because we moved down, we still keep this the same because it was our most recent maximum profit reached, which is that +8 over there, -5. So we still keep the +3 over there. Let's now start speeding this session up because it is becoming quite long. So let's see over here. Right, we needed to break this low. Right, it needs to break this low over here, retrace, then we'll take the sell. Okay, looks like nothing is happening though, so we'll just wait for another trading opportunity. We can see this is an uptrend overall, so we're going to wait for this high over here now to break, right? We need this high to break above, retrace, and then we take the buy, right? So we're going to wait. I think it already happened, but we'll just wait for a brand new one. If we see, there we go, retraced, right? We'll place the buy over here. Look how that massive push happens. That is literally the prime example of the intrabar continuity because it's not just breaking the high, it's retracing back and then showing that the trend's going to continue to the upside. That was a really good trade. That shows the power of it, right? And I'm kind of blessing you all with this, especially for you all as beginners. Now, that's +8. You can see how it's creating new highs. We just need a retracement. Boom, we're in. Right, we're taking another buy. Let's see how this plays out on this trade. And a loss, okay? So now that's just going to put us to +7 again, right? And we just need to add the win that we made over here and then the loss over here. So this should put us to 612 and then 612. Perfect. Let's speed this up now. Wait for that retracement. Boom. Retracement's in. We place this buy to the upside. Win the trade. Beautiful. Let's add that win over there. Now, that puts us back up to +8. Let's keep going. Cool. You see how there it's creating a new high and retracing? But look at the time. The time over there was it only had like 3 seconds left on the candle, right? So we can't place that trade because if we place a 5-second trade when there's only 3 seconds left on that candle, it's going to mean that 2 seconds are going to be playing out on the next candle that you don't even know like what's going to happen in it as well, right? Let's wait for this high over here to break. Looks like it won't, so we'll just stay out of it. Wait for a brand new one. Looks like this is a strong downtrend over here. So we'll wait then for this low to break, right? We want that low to break. So let's wait. We will have it break, retrace, place the sell, let it play out and see. So let's wait and see. Looks like there's a lot of buyers over here pushing it up, so I'm not going to waste my time there. Very, very choppy markets. Again, you can see no clear direction. I mean, it is going in a downtrend, but it's a lot of up, down, up, down. It's a shit market, to be quite frank. Cool. So 653, just making sure 653. Yeah, I think I have to add a loss and a win here. I think I might have messed something up on here, I believe. So what I'll do is this. There we go. Add a loss and a win. Okay. Just get back on track here. So there. Cool. We had that win. Then we had a loss. And then a win. Right. We'll just go with that. That's perfectly fine. We can still just focus more accurately on what we had here. I was probably just too focused on the stuff that I was putting here. I mean, we can just obviously update it as we go along with this. So 653, you can literally just type in 653 over here if we wanted to, but it's not the end of the world. We're slightly off. It's because I was likely just explaining the information, trying to relay it onto here as well, then relay it onto here, explain a whole bunch of concepts, and then I have to go through this whole loop, and I'll probably misclicked or mistyped. So what we'll do is we'll just eliminate this. The whole idea of this was literally just to go and show you exactly how this whole calculator worked, but because I'm busy multitasking, I probably misentered one of the values, but that's not the end of the world. I just wanted to obviously inside of this free course show you what you can get inside of the paid program using this calculator. Obviously, when you are trading, you're not going to be speaking to someone, teaching them whilst punching values into here and also explaining on here, whilst also explaining on here and placing trades and trying to track the like everything. It's a lot, right? So this is all just to go and show you what it does look like, but we'll obviously eliminate that. It's fine. It's all good. You can obviously have seen what that looked like. Let's get back into this session. So we're still up 8 units, right? We're only 4 units away from our take profit. This will now make it a lot easier for us to trade. Perfect. Now, that calculator that you saw is in the paid program. Just click the link, go take a look. There's like videos explaining the results behind all the students and how they're doing so well. We also have a community which you can pretty much go and join and get the same results as them, right? And get access to all the tools, just like the calculator, which is only one of the things that you get access to. Let's go though. So we're gonna obviously get rid of that calculator that we did so that we can focus on closing these last couple units of profits and getting from the +8 up to +12, right? Like we said, worst case scenario, we walk away and only make the 3 units gained. But isn't it funny how you can call something a stop loss or a trailing stop loss when worst case you're going to make money, which I think is pretty cool, right? And that's what I love about trading is you start off the same every session and then every session is unique. Like one session you'll just smash the +12. The next session it will hit your stop loss or your trailing stop loss. The next session it will hit like break even. The next session it will hit like +4, +5, or like -2 or like -1. But the point is, it's very rare that you're going to lose 5 in a row and it's going to hit -5. But if it does that, it's like not even the end of the world, right? You just got to keep trading. Here we go. Let's finish off these last couple trades on this session. And then that will be pretty much successful. So let's go. Looks like it's not going to break this low over here, but we've got 50 seconds, right? We need that retracement. Boom. Retracement's in. We take the sell. Let the trade play out. Let's see how it goes. Looks like another losing trade over here. Now, this is something I need to teach you, right? Okay, so what you would have noticed, actually, what I want to do, and this is going to sound very contradictory, I want to bring the calculator back. And I know it's not the right values, but I need you to see something. Because although the numbers over here aren't truly accurate, like I said, I misclicked or mistyped some of the values, but this was completely unplanned, right? What you'll notice is that we've been bouncing between +8 and +7, right? Between these two numbers quite frequently. We obviously lost that, so we went down to +7. This is a thing called variance, right? And when variance happens like this, what it pretty much means is on your chart, and this is why I love actually using this calculator and using this equity curve, because you can clearly see the changes in the behavior of the session. Remember, we had like an 85% win rate. We now have a 66% win rate. Remember, when we were first trading, look at how the chart was moving, right? You can see that the equity curve was very clean, right? It was very clean. It was moving in great streaks. And then what came along? Variance. Variance just means that you have a whole bunch of wins and a whole bunch of losses alternating after one another, right? You'll have a win and then a loss, 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 right? And this is part of risk management and understanding the session. When it's doing something like this and it's going up and down and up and down and up and down, creating no clear direction, this is just like the markets. When a market is doing this, how do you know where it's going to go, right? At that point, you're gambling. You're gambling whether if you're trying to take a sell, it could go up. If you're trying to take a buy, it could go down, right? Or it could do anything. The same thing can happen here. Right now, we could possibly risk losing a whole bunch of units that we could gain and then only walk away with +3. Or we can make a smart decision using smart risk analysis and risk management, which is what I wanted to break down in this live session. So you can see exactly how a professional in this reacts to sessions in front of them. What I'm going to be doing here is walking away from this session with 7 units in profits and technically roughly around $600 gained. We can obviously see here $553 gained on this session. Why is that? Because it's better to walk away with 7 units than 3 units, right? At the end of the day, that's all that matters, right? Profit is more important. I know that we could have walked away, worst case scenario, with the +3, but every single time I follow a thing called the variance rule. And the variance rule pretty much means that the moment I start seeing the chart or the equity curve oscillating like this, when it starts oscillating like this, moving up and down, and there's no clear direction. Remember, we were at like an 83% win rate, right? Now we're at like a 66. The only reason that has happened is because the total trades has increased and the number of wins and losses has just been bouncing up and down, up and down, up and down, which means that the wins have not been changing much and the total trades has been increasing. So pretty much the total wins, right? If you look at the formula, the total wins over total trades, which is just equal to your win rates, right? That's equal to your win rates. Your total trades is increasing, but your total wins is pretty much staying constant and only increasing a little bit. Well, this is increasing a lot, pretty much by double, right? Because it's obviously increasing every time you take a win or a loss. Whereas the win, it's only increasing by half. This is obviously going to like massively reduce your win rates, all because of variance. And whenever there's variance, whenever I see that my win rate is dropping, and whenever I see the chart is oscillating like this, and it's pretty much consolidating like this, it's pretty much gambling. It could either go up, it could either go down. And at this point, I already know I need to get out of the session because worst case scenario, this could literally immediately go straight down to my +3 and I can start losing. And I was already noticing that inside of my session. And this is another thing called, it's called smart risk analysis. And I teach it inside of the program, right? Smart risk analysis is more, and risk management is more than just numbers. It's more than just saying, okay, I'm going to trade this amount. Okay, I'm going to stop trading here. Okay, I'm going to take my profit here or my stop loss here. All right. It's looking at your actual chart in front of you. It's looking at your equity curve. It's being able to constitute what your session looks like graphically as results of your actual equity on a curve, on a graph, and then relating that back towards your current data that you have with your current trailing stop loss, as well as your current most frequent maximum profit reached, and combining it with the variance rule, with your win rate dropping and the oscillation, realizing that it is probably the best decision to get out of this session and guarantee yourself more money than just hitting your trailing stop loss over here. So that is exactly why I'm getting out of this session and securing myself a total of $553 in profit. What does that mean? That means that we have made a 5.53% return on this session in a very short amount of time. I know I've been explaining this, speaking and teaching, but imagine how quickly you can make this return on your own account with quick trading without doing any of like the other stuff that I was obviously like teaching and drawing and stuff, right? That shows the power behind quick trading and using smart risk management. All of this that I taught over here, risk management, all of this stuff I taught over here, risk management, risk management, risk management. That is the power of risk management because you aren't trading based on how you feel. You're trading based on data. When you trade with data, statistics, and mathematics, you are going to become a winning trader because as that trader, you aren't just following the strategy, right? You're following the risk management, which pretty much relies that you don't get emotional, you have a good psychology, you focus on the data and the statistics, not how you feel. Because at the end of the day in trading, what matters the most is the numbers. The numbers do the talking, right? The numbers and the execution do the talking. And don't you notice that in the words live session and risk management? The live session is the execution, and the risk management is the numbers. When you combine those two together and you execute the session and the risk management just like I did in this session on a consistent basis, you can make money. That is now the end of the live session and risk management. If you want to start making money in quick trading, you need to understand that there are levels to this. And if you do want to make money, you have to execute and respect the numbers of the game, respect the rules of the game, the risk management, and the execution of it, just like I did right now. That's how I've made my millions and how you can too. Follow structure. Follow a system. Remember, I said a system, right? A system in quick trading comes down to a couple things, right? And I might have already broken this down, or it might have been to my students. A system comes down to your strategy, right? Which is then broken down into your rules. That strategy then gets broken down into risk management, which is pretty much like a numbers thing. Now, there's another last thing, which is obviously the psychology, which we're going to get into next video, right? But at the end of the day, the strategy, the rules that you follow, and your risk management is your system that you need to follow. It's your operating system. But now moving into the psychology, all of this can matter. The strategy can matter. The rules can matter. The risk management can matter. The execution, right? Everything that I've done inside of this entire video can matter. But there's one very important thing that you need to notice that I pretty much exhibited and showed inside of the last 10 minutes of this video, which is trading psychology. You would have noticed that I was very calm and I was very confident in the decision that I made to exit this opportunity to get to plus 12, but to rather take the plus 7 because I saw variance. That is me having years and years and years of experience in trading and understanding that my psychology was going to get ahead of me because I knew that I was going to start getting frustrated, that I was getting nowhere. And when you get frustrated, that's when you start making mistakes. And when you make mistakes, you start losing money. So that's where we're getting into next, is the psychology of trading and how you can master that psychology so that your entire operating system does not just rely on your strategy, your rules, your execution, and your risk management, but also exactly how your emotions should remain stable, ensure that your thoughts are correct, and that you can execute with more confidence, with less fear, with less greed, and with more certainty. So that's what we're going to move into next, is now the psychology. I hope you enjoyed this live session and this risk management video. It was absolutely incredible to share this to you all. What a great lesson. Risk management and live session is now done for the intrabar continuity strategy let's now move into the psychology and wrap up the course.